In this video, we are going to take a look at a small company called SciPlay. We will look at its recent earnings, we will analyze this company, and we will find the intrinsic value of SciPlay to decide is it an attractive investment possibility. So, what does SciPlay do? It develops and operates a portfolio of free-to-play games for mobile and web platforms. It offers casino games such as Jackpot Party Casino, Goldfish Casino, Quick Hit Slots, Monopoly Slots, or Hot Shot Casino, as well as casual games like Bingo Showdown or Solitaire Pets Adventure. Recently, they also acquired Alictus, which is a leading Turkey-based developer of casual mobile games. So they are growing and expanding their business into new markets. SciPlay Corporation is a subsidiary of Light & Wonder, which is an American corporation that provides gambling products and services. They provide such products like slot machines, table games, shuffling machines, and casino management systems. SciPlay is a small cap company with a market cap of around $364 million. It is also a fairly new company on the stock market. Their IPO took place in May 2019. One of the reasons we will analyze SciPlay is that it is listed on the Magic Formula investing website, and I should shortly make a video about the little book that beats the market, which explains the magic formula and how to use it in investing. So remember to subscribe and press the bell icon so you will not miss that video. Okay, so let's take a look at the Q3 earnings. Revenue is up by around 8.3%, but the net income is down by 13.2%. And the main reason for lower earnings is a substantially bigger amount of money spent on sales and marketing. Another a bit worrying sign is a decline in cash and cash equivalents by almost 18% in the last 9 months. So there is not a lot to get excited about in the recent results. But let's take a look at the big picture and analyze this company. First, let's see who owns SciPlay. Individual insiders, that is a check. Individual insiders own 3.4% of the company, and we are looking for a number higher than 2% because that shows us that people running the company have skin in the game. And are they buying? That is an X. We don't see any movement from individual insiders in the recent months. And do super investors own any shares of SciPlay? That is an X. There are no super investors that own this company. So, of course, super investors are also not buying. Okay, so now let's take a look at the financial health of this company. Return on invested capital. That is an X. It is only 3.2%, and we are looking for a return of over 10%. So that does not look good. And free cash flow growth? That is a check. It is a growth of 28%, and just like with return on invested capital, we are looking for a growth of over 10%. Okay, so let's take a look at the net profit margin. That is an X. It is 2.7%, and the sector median is around 4.5%. So unfortunately, they do not have a pricing advantage over other companies in that sector. And shares buyback? That is also an X. They issued extra 7.4% shares since the IPO. And does SciPlay have a lot of debt? No, it doesn't. Actually, SciPlay has no debt at all, and That is a very important piece of information because, like Peter Lynch says,
it's very hard to go bankrupt if you don't have any debt. It's tricky. Some people can approach that. It's a real achievement.
So it is a mixed situation when we look at the financial health of this company. And does it pay any dividends? No, it doesn't. But it is a new and small company, so it actually can be a good thing because SciPlay is keeping the money to invest in the growth of the company. Okay, so we know a bit about SciPlay and its fundamentals, and now it's time to value this company using a discounted cash flow formula. We will have to estimate the growth of SciPlay for the next 10 years, and we will make 3 scenarios: low, medium, and a high one. Because we want to be on the safe side, we will use an average 5-year free cash flow, which is slightly lower than the recent one. And in the low scenario, we will estimate a growth of 2% for the first 5 years and then 1%. In the medium scenario, 5% and then 3%. And in the high one, 7% from year 1 to 5 and 5% from year 6 onwards. And the intrinsic value is $58 in the low scenario, $70 in the medium, and $81 in the high one. But these are not the prices we should be looking for, because we always have to add a margin of safety. I use a 30% one, and with such a margin, the price in the low scenario is $41, in the medium $49, and $56 in the high one. And the current price is $15.40. So it is all in the green. And the difference between the value and the current price is really substantial, even in the low scenario. So it seems that it is not the best company in the world with low return on invested capital and below average profit margins. But at the same time, it looks very cheap. So remember that before making any financial decisions, you should always do your own due diligence and treat this analysis only as the first step in understanding SciPlay. Thanks for watching. Please like this video if you found it interesting and subscribe to the channel if you want to see more videos like this one. Thanks again and bye-bye.